In this video, we're going to talk about delinquent taxes and the tax lien foreclosure process. So, if you don't pay your property taxes, those delinquent taxes bear interest from the dates of delinquency at 16% interest. That is a state-required 16% interest. And if you continue not to pay your taxes, eventually the tax lien on your property will be auctioned, and that is sometimes referred to as a treasurer's sale. The county treasurer is required to advertise the tax lien auction in a newspaper of general circulation. In Pima County, it happens to be the Daily Territorial, but check with whatever county you're interested in to see what paper it would be advertised in. So the tax lien auction is also known as a treasurer's sale. And at that sale, the lien is sold at auction. It's not the property that's being sold. What's happening here is the treasurer is selling the lien to the highest bidder. And the highest bidder is not the one who bids the most money. The highest bidder is the one who is willing to accept the lowest interest rate on the certificate when the owner redeems. So, for example, let's say that $1,000 in taxes are owed, and at the tax lien auction, the maximum bid, remember, can only be $1,000. So the interest rate bidding actually goes from 16% possibly, which is the highest amount that anybody can bid, down to potentially zero. So a typical bid at the auction might be someone might bid 16%, somebody else bids 15%, someone else 14%, 13%, etc. They have to go down in 1% or multiples of 1% increments. Sometimes what we see happening is someone starts bidding at 16% and somebody else jumps to 5%. So it's really fun to go watch a tax lien auction, and I highly recommend that you do that at some time. Whoever wins the bid receives a certificate of purchase or a CP. Now, at this particular point, the owner actually has 3 more years from the date of the auction during which the owner can redeem the tax lien and prevent a foreclosure by paying all the money that was bid plus all of the interest. So the owner will pay the bid plus the interest stated on the CP. The proceeds from the redemption are paid, by the way, through the treasurer to the certificate holder. If there's no redemption, then the bidder can, number one, foreclose, in other words, take a court action and get a treasurer's deed, which conveys ownership to the bidder, or let the interest continue to accrue on the certificate and not foreclose right after the 3 years, but maybe do it after 4 or 5 or 6 years. But beware, because the foreclosure action must be taken within 10 years, or the lien becomes void. Now here's a look at a tax lien timeline to help you understand this whole process. And we're using here the year 2018. So if you remember from another video, on November 1st of 2018, the first half for the 2018 taxes became delinquent, and the county is charging 16%. Nothing happens here, and following May, assuming the taxes haven't been paid, the second half of 2018 becomes delinquent. Now, tax lien auctions are always held in the month of February. So in February of 2020, the 2018 delinquent taxes will be auctioned. And if there are other years, prior years, that are also delinquent, they will be included in that. And let's assume the bidder, the successful bidder, bids 7%. So the interest rate on the certificate is 7%. So from this point forward, the bidder pays their, let's say it's the $1,000, and the bidder will receive 7% on that $1,000 that they paid to the county. Now we begin a 3-year redemption period, during which time the owner can come in to the treasurer, pay all the delinquent taxes plus the 7% interest, and redeem the property. But if they don't redeem within that 3 years, then anytime after that, the tax lien certificate holder can begin the court action to foreclose the tax lien. So that's our discussion on delinquent taxes and tax lien foreclosures.